Hi and welcome to the Market Alert for Thursday, the 15th of August 2024. So bullion, Bitcoin and black gold battered, but sanguine CPI leaves stocks and bonds confused. And stocks mixed on inline CPI ahead of retail sales and jobless claims data, which I think is out today. So yesterday CPI numbers came out for both the UK, 7 a.m. it was 2.2, 2.3 was forecast, but it did say that it actually rose when you look at the headlines here. So it must be the core CPI. So inflation rises first time since last year. And then the US, we also saw a slight increase, I think, or we will across the board, the core. The core had risen, hadn't it? Just slightly there. That's why it sent the markets, well, particularly the metals, to the downside. And month-on-month CPI also higher there as well. Previous minus 0.1, 0.2 there. But the main year-on-year shows a decline there of 0.1. And that, of course, coming out, core consumer prices hit new record high for the 50th straight month, so that's why it set the market sort of a bit slightly sanguine and not knowing what to do. So with that, let's have a look, see what they did do yesterday, and we'll kick off with the Dow. So in the Dow, despite the confusion and the difference between the core and the year-on-year, market managed to move higher, and is still moving higher. So we're 41,000, not 44. Maybe that's the next upside target, who knows. 41,415 is back on the cards. You can see the market's got no issue. There's geopolitically, everything seems to have settled down, and the market's free to move back to the upside. Japan are obviously very quiet at the moment about raising rates, and after the last time they raised rates, we saw what happened. And we've also seen how the recovery is in place. So the 89% retracement to 40,925 is well and truly on the cards for all of these markets now. And yesterday you can see the reaction to the CPI numbers, and then prices continuing to move to the upside, and also overnight as well, trading up to yesterday's high for the Dow there. In the German DAX, similar picture. Market managing to move up yesterday, not too volatile, stuck at the 20-bar moving average at the moment, but taking out yesterday's high already, 62% retracement. Shouldn't be too much of a problem. You've got the 50 EMA in the way there, and then you've got the 78 and 89, and then the other target price is there on the upside should the market continue to move to the upside. Like I said, I don't see any reason why it shouldn't. Given that the CPI numbers are now out of the way, there's not really a lot of other apart from retail sales today. Market really choppy yesterday morning, waiting for those CPI numbers. They came out, and then you can see the market's reaction. It took until the overnight, when nobody's selling, to move the market up. Price is above the high already. Got the R2 up there where the market's had a quick look at it, but pulling back there at the moment. But otherwise, again, there is no reason. Might get a shakeout to start with, but then expect the market to continue to the upside. S&P, exactly the same, just going through 78% retracement, and also yesterday's high. We've got the other upside targets, and we've got the all-time high there of 55. Is it 55 or is it 56? I think it's 56. There we go. 5670. And in the 30-minute chart, again, you've got the market's reaction to the CPI numbers, shakeout just below the 50 EMA, and then back up, pulling back and finding support at Tuesday's high, and then continuing up, and at the moment above yesterday's high there as well. And in the FT100, same picture, market up to 89% retracement, back to the all-time high of 8477. Nice move off the 200 MA, which we've seen already. So yesterday morning we had the CPI numbers from the UK, and then the market pulled back to Tuesday's close and high. Lots of volume. Market holds at this level, follows up with the Dow. Had a gap overnight, but this has been filled, and the market making its way back a bit there. But watch the DP and the close for this market. Economic news for today. We've got the GDP for the UK month on month is to show flat basically. Previous was 0.4. Prelim GDP as well, that's forecast slightly lower. The French market and Italian market are closed today. Then we go over to the core retail sales for the US at 130 there. So what have we got? To drop slightly, to increase month on month, and then the unemployment claims are to show 236,000 from last week, claiming some sort of benefit. Empire State Manufacturing is also out today, and the Philly Fed Manufacturing Index as well, to show quite a drop-off in the Philly Fed Manufacturing. Empire State minus 5.9 last month. It was minus 6.6. So let's see what happens when they come out. It's quite a collection actually for 1:30 p.m. So activity today really is going to be around 1:30 p.m. In the US dollar, this is sideways to lower. Still haven't taken out the low from last week where we had all of the volume. Market sideways, could end up with a bit of a bounce there. And of course that's going to impact on the metals. So let's have a look at those. And starting off with silver, the market down yesterday, but overnight price is trying to get back to the upside. Got the 20 bar moving average in the way. I expect this to be constrained by this at the moment. Anything to get the market down. I guess I keep saying, and yesterday in the alert I said if the CPI numbers came out, particularly the core, higher than forecast, then you could expect both gold and silver to be slammed, and they were. Overnight there's been a bit of recovery in the Far East. Gold did its best to get towards the all-time high yesterday and was slammed, as I said in yesterday's alert, if see any chance of the CPI coming out higher than forecast, whether it's a core month on month or year on year, then the market would be slammed, and slammed it was. Prices recovered a bit overnight, so let's have a look at the impact of this on the gold-silver ratio. And yesterday the gold-silver ratio moving back up. We still haven't taken out the 90. 92 for me is going to be the area where this market is going to find a bottom. When I say a bottom, that is the bottom in silver around 26. Till then we've got plenty of smashing we can do, or the banks can do, to keep the price suppressed. So closer look. We've got a bit of red there overnight as silver's managing to rally back a bit. But otherwise, expect these markets, despite the dollar moving down, to still be under a lot of pressure, particularly gold. If it gets back to the all-time high, makes a new all-time high, then that will certainly come in for some being smashed to the downside. Right, let's have a look at yesterday's trades, see how the market fared with both the UK and US CPI numbers. So the release of UK CPI numbers, you can see them there. Market, just wind it back for you so you can see there, powering to the upside, then failing miserably. Market coming back to the high. The average is all in line though. 200 is below the 50, 50 is below the 20, and the 5 above the 20 there. So all nice and tidy there. Market pulling back to the 50, then we open and the market does absolutely nothing. Gets down to the high, then trades sideways. We have a potential buy signal. Market trades up to the just above the high where the opening salvo was, and then the markets become sideways to lower as it comes back down to retest the high. Goes through the high, the 200 MA, and the close. Before prices find some support and then make their way back. So very indecisive there after the UK CPI numbers. We then go into the morning, ready for the US numbers, and then we get those. Big spike up and then back down. Core CPI up, and the market finding support at the 200 MA, and then the volatility dropping off as each consecutive price bar becomes narrower. And then we get to the opening of the US cash market. Prices move lower with this, back down to the high, then down to the close, and then retest at the close before moving slightly lower once again, just to shake out the last few. And then prices start to make their way back to the high, and the market basically just becomes sideways. We have a potential sell signal there that goes down to the scalp, just through it, and then the market starts to make its way back, and then back to the close, and then all the way back through the high. There's the 200 MA where the market shows a bit of difficulty, but it soon sorts that out, as you'll see in a moment. Prices moving through this and heading back to the upside, and then just treading water as the US also does the same. Another shakeout back to the downside after 5 p.m, back to the high. They did everything they can to keep this market above the high, as it can be seen there. So A quick look at overnight prices, and here you can see that currently we are moving to the downside. We've got the high there, we've got the 200 MA in place, sitting at the R1 at the moment. The market not doing a lot as it awaits for the 7 AM open there. At the moment it's only 20 minutes past 6. So there we go. Let's see how the market reacts at 1:30. It will make its own direction this morning. The French and the Italian markets are closed, so it'll be interesting to see what the German DAX does at 8 AM when the cash market opens. Okay, that's it for this one. As ever, thanks for watching. See you in the next